on Santa's lap and make your Christmas wishes. My aunts are in the kitchen cooking up the 7 fishes.
There we go. There we go. Hey, we are produced by the sports doctor Cullen McLaughlin, who's part Italian, by the way. So I can see him bouncing in there. He knows what we're talking about. Brought to you in part by Hagerstown Ford, by WVU Medicine, Berkeley Medical Center, Jefferson Medical Center, and by elder care attorney Danny Staggers in Martinsburg at 304-267-3915. And Danny will be with us in the back half of this hour. Welcoming in our co-host, New York Times bestselling author John Gilstrap.
Good morning, sir.
And soon to be retired from the Public Health Board here in our wonderful county, Mr. Bill Kearns.
It's great to be here.
Counting down the days.
Counting down the days. Our
guest in this segment is CPA Ken Apple. And if you are a small business owner, in my case, serving a person who serves on a homeowners association board of directors, you've gotten a directive to get a FinCEN ID. And maybe you've heard those commercials where everybody sounds so happy about turning over their public information to a government website. They do seem ridiculously happy about it, those commercials, by the way. And this is apparently some way of further helping to stop money laundering. So Mr. Gilstrap said to me, are you familiar with this thing? Because it's a real pain in the you-know-what. Let's get Ken on the show. And just like that, Ken's on the show. Good morning, Ken.
Good morning, Rob. Good morning, John. Good morning, Bill.
I like your Christmas tie.
Thank you.
Very festive.
The Peanuts there, Snoopy and all the gang.
Hey, before we get started on that, I do have a bone to pick with some of your advertisers.
Watch the health department ones. I'm sitting here, Ken.
I don't think the health department does it, but
okay.
With some of your attorneys and hospice with the Panhandle, they all have this line in there. I don't know if you added it or they added it to themselves, but that they'll treat you like family. And every time I hear that, I yell at the radio because am I the only one that came from a dysfunctional family? I'm like, if you're going to treat me that way, I'm not coming to see you. I mean, what are you going to do? Correct my grammar? Tell me my music's too loud? Take away the car keys?
I told you.
Who needs that?
The funniest man in accounting. I told you that. That's like that line, I love you like a brother, which is followed up with, I thought you didn't like your brother. That's kind of a thing right there. So, Ken, what is this FinCEN ID? Why is it necessary? And I understand there's a lawsuit that has put it on hold for a moment.
That is true. So, there's, as in anything that the government does, there's a bunch of acronyms. So it's the Beneficial Ownership Information, or BOI, is what we're talking about. This is a law that was passed by Congress in 2021 called the Corporate Transparency Act, okay, or CTA. Mm-hmm. It is enforced by FinCEN, which stands for Financial Crimes Enforcement Network, and they're part of the U.S. Treasury Department, which, of course, the IRS is part of the U.S. Treasury Department. And the purpose, as you stated, was for anti-money laundering. So FinCEN is tasked with uncovering money laundering by individuals and by entities. So if they find an individual, okay, they've got that person's name, address, social security number, whatever. But if it's an entity, a corporation, either a C corporation or an S corporation, a limited liability company, a partnership, they've got the name and address and a federal identification number, but they don't know necessarily who is controlling that entity. So that's what this law is about. It is requiring people who control an entity to fess up and say they're the person that controls that entity, so that if that entity is doing anything nefarious, then FinCEN knows who's behind it.
If I'm a nefarious person, would I be complying with this law anyway?
Not likely, and that's why the penalties are so high. So the penalties for not complying with this are up to $591 per day, up to a maximum of $10,000, and up to 2 years in prison.
Now, I understand, because I had to go through this in November, I understand that once you are registered with FinCEN and you have your ID, I'm going to talk about this as a homeowners association board member. I was told once I leave the board, I have to notify whoever the entity is. I don't know who it is, but I have to notify them that I am no longer a board member. If I do not, the punishments include up to 2 years imprisonment.
Correct.
For not notifying that I'm no longer in the position to launder money.
That's correct. So I don't think that is on you to notify them.
Oh, it is.
It's on the homeowners association to notify them of who went off and who went back on. And homeowners associations, they're trying to get an exemption for homeowners associations. First, because they tend to change officers
Routinely.
pretty frequently, right? So, I mean, if you own a business that you have incorporated and you're the only owner of that business, you sign up once and you never have to sign up again. But an organization like a homeowners association, they're going to have to be on there at least every year and sometimes multiple times a year because people resign their position midway through the year and they appoint somebody else. And
Especially
that new
once
person has to go on.
They learn they have to go through this, they resign their positions.
Exactly. So they're trying to get an exemption for homeowners associations while this temporary injunction is in place. The timing for reporting is if your entity was created before January 1st of 2024, you have until December 31st of 2024. So you got 2 more weeks, right? If the entity was created during 2024, then you only have 90 days from the time it was created. So the vast majority of entities that were created in 2024 have already signed up. The vast majority of entities that were in existence on January 1st of 2024 have not.
And who has to sign up for this?
Whoever controls the entity.
As an example, I write the books, but I'm actually a member of Swift River Books LLC. So, one of one. I have to do this,
Yes.
even though they could actually go to the IRS and all this information is already there.
Yes.
Okay.
Yes. And that's part of the reason for the injunction. The main reason for the injunction is that the law is being challenged as unconstitutional. And a federal district court has agreed and issued this temporary injunction. So while the temporary injunction is in place, and assuming that it's in place still on December 31st, you're not required, if you haven't already done it, you're not required to do it while the temporary injunction is in place.
But if prior to the injunction, every business owner had to do this, correct? You had to
Not
do it
exactly,
as a CPA?
No, not exactly. If you operate as a sole proprietorship, that's a business and you're the owner of that business and you don't have to register because the business name is your name, so they know who you are.
So you as a CPA did not have to register?
I did not have to register for 2 reasons, because I do operate as a sole proprietorship and also because I'm a CPA.
Really?
So we're exempt.
That's fascinating.
So there.
I would think you'd be more skilled in moving money around than I would be.
I was thinking that, but I wasn't going to say it.
Okay, so I have on my outline, I have the exemptions. So there are 23 exemptions to this reporting law, and none of them apply to you.
Gilstrap, suck it up.
Okay? So if your business routinely generates over $5 million of income per year, you're exempt. And
Over $5 million.
Over.
They don't care if I hide $6 million. They just don't want me to hide.
Don't hide the
40,000.
first 5.
Yeah. Okay.
And if your business employs more than 20 full-time people, you're exempt. And if your business is a nonprofit business, and that is it was designed to be a nonprofit business, because I have plenty of clients that have nonprofit businesses, but they didn't register as a nonprofit. They just don't make any money.
Mike needs to talk to you.
Or the third exemption, which encompasses 21 exemptions, is if your entity is already registered with some arm of FinCEN. Banks, credit unions, CPA firms, investment advisors, that kind of thing. Because they're already scrutinized by FinCEN. So that's the main reason I don't have to register, because I'm already scrutinized by them.
Okay, that makes more sense then.
I think the assumption is that if your business is of the caliber, you've got more than 20 employees and more than $5 million a year, you're already on the radar of someone.
All right.
and probably there's public information on you that they can figure out who's behind that organization. If you do have to register, which is most of us, then you don't necessarily just have to register one person. In John's example, he's the 100% owner of his LLC, is it? Mm-hmm. Yeah, so you're the only one who has to register. But if you are a 25% or more owner of an entity, you have to register. So if it's a group of 2 people, 3 people, 4 people, and they're all equal partners, all of them have to register as beneficial owners of that business. Also, with an LLC, we can distribute profits of an LLC in a manner other than ownership interest. So if you are a less than 25% owner of an LLC, but you share more than 25% of the profits, you have to register also. And then anyone with what they call substantial control over the entity also has to register. All right, so if I'm a 100%, anywhere between a 25% and 100% owner of a business, but I don't run the business, I hire a chief operating officer, chief executive officer, whatever, that officer also has to register.
Go ahead, Bill. You look like you had a question.
Yeah, in hearing all this, and people are creative. We know that. How effective do you think this is going to be, Ken?
I suppose I don't know that it's going to increase effectiveness, but it's going to be a shortcut. Okay, so most money laundering gets uncovered by banks in the United States. They file either large currency transaction reports or suspicious activity reports. And that suspicious activity report might say, this looked like money laundering to us, and it was done by XYZ Corporation. And that's all the bank puts on the suspicious activity report. Well, there's a way for FinCEN to find out who is in charge of XYZ. This will just shortcut it, because they've already got the information on file, and they've already got a picture ID of the people that are behind it.
My issue at the HOA level, Ken, is we have a management company that handles all of the money. We don't touch a penny of actual physical cash. We don't take checks, credit cards. As board members, all we do is go to a meeting, and then we go back home. Or sometimes we just do it virtually. So the requirement when it came down to us to register as potential money launderers smacked me of a lack of common sense. This is just a big waste of time. I don't handle money in any form as a board member because we pay a management company to do that. So requiring us to register for this was irritating because it's illogical and it's a giant waste of money and time.
Well, but not every homeowners association operates that way.
But ours does, so we should be exempt from it.
You can apply for an exemption.
Well, apparently that's part of the lawsuits.
I don't think you want to spend that kind of money, but you could apply for one.
What I find shocking,
the other thing a homeowners association can do, and this is an important point, because the vast majority of homeowners associations are corporations. A homeowners association can, if they want, and a few of them do, they can apply with the Internal Revenue Service to become a bona fide 501c3 charitable organization, a nonprofit organization. If they do that, then they're exempt.
For a homeowners association to be a 501c3?
Mm-hmm. Yeah, because homeowners associations, no homeowners association is a profit-bearing company. But the easy way to do a homeowners association is to register it with the Secretary of State's office in your state as a corporation. And then they file a short form 1120H, it's called, H for homeowners. And they just file a short form tax return and only pay tax on their investment income. And that's what the vast majority of them do. But a homeowners association can go through the lengthy process of applying to be a nonprofit organization with the IRS. And if they do that, then they're exempt from this reporting.
John Gilstrap's question to me was, hey, I'm just finding out about this, and we're in mid-December.
Yeah, it was December 14th.
2 weeks left.
At a party.
Mm-hmm.
Whose job was it to notify business owners that they had to look into this?
Apparently no one. And that's why the American Institute of CPAs has been challenging this and asking for extensions and exemptions from the day they passed the law back in 2021. They haven't been successful, so that's why the courts have gotten involved. I guess arguably nobody notifies you and tells you have to file a tax return each year. We all just know it. But I would guess that in 2013, when they created the income tax law, some announcement went out and told people that they had to do this. And the only thing that I have seen notifying people is the Secretary of State's office in most states have sent a mailer or an email out to their businesses that are registered with them notifying of it. But FinCEN itself has not. So they're not going to tell you that this law exists or that you have to comply with it, but here's the penalties if you don't. And what do they say? If you don't have knowledge of the law, that's no excuse. So
Ignorance of the law.
right. So as for example, as of October 31st of this year, they estimate that there are 32 million entities that need to register. As of October 31st of this year, 6.5 million of them had. And the vast majority of those were entities that were created in 2024. So the overwhelming majority of businesses that were in existence on January 1st of 2024 had not registered as of October 31st.
Wow. Total of 10,000 per. That's a lot of extra revenue for the government once the fines hit.
Way of closing down that budget deficit,
Yeah.
John.
Yes.
So, Rob, when you serve your 2 years of
Yes.
hardcore time in prison, what is going to be your story? Why did you serve?
I'll have to come up with something better than I failed to notify them I went off the board of directors.
Serving alongside of murderers and rapists and all. And why did you serve? Well, I didn't register.
It would be like that Alice's Restaurant song. All right. So, Ken, anything else on that, by the way?
Now in practice, these fines and certainly jail time are only going to apply to actual money launderers. Al Capone never served any time for what he did. He served time for not reporting his income on his tax return, right? I think this is what they're getting at. This is another way to punish people that they can't prove were actually money laundering. But like you said at the beginning, if you actually are money laundering, are you going to register? Probably not. So now they can get you for not registering if they think you are a money launderer.
Well, this all sounds very government-esque to me in terms of how it's been administered, completely secretive application of it. It's just so perfectly government.
I think the hope is that the injunction will stand until January 20th, and that sometime shortly after January 20th, this law will go away. But we can't count on that for now.
Well,
What's significant about January 20th?
It's Inauguration Day.
Oh, yeah.
that's when President Elon Musk takes over.
What I also think is very interesting in this very governmental is the penalties up to $591 a day.
91.
Not 90, not 600, $591 a day, just to make it that much more difficult to calculate, I guess.
And pay in cash. Yeah.
That's how they take a 30-page bill and turn it into a 1,500-page bill, yes.
Ken, about 5 minutes left. Any tips for people as the year end comes to a close for saving on their taxes?
Absolutely. So if you haven't decided yet whether you're going to itemize deductions for 2024 or not, you better decide soon. Don't wait until it's February and you're ready to do your taxes and then just add everything up and say, well, I got close, but I couldn't itemize. You need to do that now so that you can either accelerate your itemized deductions into 2024 or defer your itemized deductions until 2025. Maybe that'll be a year that you can itemize.
Asking for a friend. Is it legal?
I am not an attorney.
Hypothetically.
The answer is it depends.
Within the tax code, if you receive a check in payments on December 28th, and you put it in the drawer till January 3rd, is that okay? Is that violating?
That's what the IRS describes as constructive receipt.
Is that a bad thing?
So it's taxable the day you have it in your. If you're a cash basis taxpayer, which most of us are, it's taxable the day you have it in your hand.
Okay.
Now, if I mail you a check on December 31st and you don't get it until January 2nd, you're fine. It's 2025 income. I deducted in 2024 because I wrote the check on December 31st and mailed it off. But you don't have to pick it up as income till 2025. But no, all the checks that are in the drawer are taxable in the year that you received them, no matter when you take them down to the bank and deposit them. Sorry.
No, it's for a friend. It really has nothing to do with me.
Literally was for a
It's
friend.
literally for a friend.
And people who do
Because
that.
there are no checks in my business anymore.
And
so
certainly
it's
I've encountered people that have done that, right? And it only helps you the first year. Because now, in January, I've got this huge deposit. So next December, I got to do it again, or else I'm going to have
they
13
start holding
months
checks,
of income.
holding checks in November.
Yeah.
So, yeah.
Pretty soon, you got half a year's checks in your drawer, right?
Tax tables change this year, Ken, with inflation increases. And in regards to 2024 taxes, the standard deduction is bigger this year, correct?
2024, it's much larger than it was in 2023.
Mm-hmm.
It will go up slightly again for 2025, but the inflation rate for everything, for Social Security and all that, was much higher from 23 to 24 than it is from 24 to 25.
I think it's only 2%
Correct,
this year.
2.7, I think it
Makes
was.
it a little bit more difficult to be able to itemize. You got to have a larger amount, correct?
Yeah, that was the whole purpose of the 2017 tax overrate. Was it doubled the standard deduction and eliminated a ton of miscellaneous itemized deductions that people had a hard time proving. So they just got rid of those and gave everybody a much higher standard deduction. So unless you're very charitable, and I'm talking tens of thousands of dollars charitable, you're probably going to take the standard deduction.
Now, West Virginia state income tax tables are changing too, correct?
Yes.
And they changed, those kicked in for the tax year that you're doing now, and then they'll be updated again January 1?
Okay, so they're the same rates for 23 and 24,
Okay.
and then they'll go down for 25.
And how about the way of paying the personal property tax on your vehicle?
Yeah, so that's going to be fun.
That starts with a laugh.
We haven't encountered that yet, but we will very shortly in the next 2 months. So you timely pay your personal property tax, and then you're allowed a credit against your state income taxes for those timely paid personal property taxes. So you'll have to attach a copy of your timely paid receipt with your state tax return to get that credit.
And would that be effective this tax filing season?
Yes.
All right, very good. And then Social Security taxes in West Virginia for seniors who are receiving Social Security income. Are we still taxing that in any form this year?
Yes. For some people, not for others. And 3 years from now, we won't tax Social Security benefits to anyone. But we're in the first year of a phase-in for people whose incomes, federal adjusted gross incomes, are over $50,000 single, $100,000 joint. And
about a minute left. The West Virginia tax credit for seniors that most people aren't aware of.
Yes. So in West Virginia, once you turn 65, you're allowed an $8,000 deduction against your income just because you're over age 65. There's no income limitation on it or anything. And the state tax department doesn't know whether you're over 65 or not, so if you forget to claim it, they're not going to notify you and say you missed this, and you'll pay tax on $8,000 worth of income that you didn't have to.
If you've done that, how many years can you go back and file an amended return for?
3 years from the filing deadline.
And is that something you could handle for people?
Absolutely.
And how would they reach you in order to do this?
You can reach me at 304-263-8981.
8981.
Correct.
CPA Ken Apple, funniest man in accounting, ladies and gentlemen. Should put a brick wall behind him in a spotlight when he comes in.
There you go.
Ken, good to see you again.
You too.